Okay guys, and welcome back to lesson 3. So this one we're just going to go over market structure. We're going to go over the market structure basics. It should be quite a quick video because market structure is very simple, but obviously is probably one of the most key and one of the most important parts to trading. And if you don't understand market structure, then you are really going to struggle in the markets in general. So let's jump straight into it. Market structure, we've got bullish markets, we've got bearish markets. Bullish markets are uptrends, bearish markets are downtrends. So I will repeat that. Bullish markets are when we are moving up. Yeah, simple as that. Bearish markets are when we are moving down. As simple as that. And then you have something called a ranging market. A ranging market is literally just when the price is moving sideways. It can be quite messy, but it's literally sideways movement. Yeah, and that's what happens with that. So you've got 3 types of markets, or 3 types of movements in the market. You've got a bullish trend, you've got a bearish trend, and then you've got a ranging market. So now we understand what bullish and bearish and ranging markets are. How do we understand what market structure is? So drawing a bullish market out again. This is when our breaks and structures come into play. And I'm going to draw it all the way up to here, and then I'm going to do a shift as well, and then I'm going to bring it down like this, just to keep it very simple. So this is price on a chart, yeah. And all it is while we're in an uptrend, we are seeing breaks of structures to the upside. A break of structure is when market breaks that higher. So when you've got each peak on an uptrend is our highest point, we need to see that break, and we want to see a candle closure above that level to confirm that we have broke that structure point. So we have broken here, then we have broken there, and then we fail to push higher, and we actually break this low here, which now confirms, if you remember from the last video when me going over the indicator, this would be a market structure shift. A market structure shift from a bullish trend to now a bearish trend, and then on a downtrend we are looking for the low peaks to be broken. So we have a break there. Very simple. That's all we're looking for. So we're looking for breaks in the upside for bullish market. We're looking for the breaks to the upside to keep confirming that we're continuing to the upside. And then once we break the low, so it could have even broke here, it could have broke here, it could broke here, wherever it breaks, whichever low it breaks, that is confirming to us that we have now switched the momentum from the bullish trend to now the bearish trend. And that's all we're looking for, and we're marking out our breaks and structures and our market structure shifts. Okay, so this is quite a clean area. This is actually on the weekly. I didn't find too much on EU and on EU that's very clean, but we can work with this. So looking at this chart here, you can clearly see we are in a downtrend. We created a high down to a low, then we pushed up, created another high. We need to break this level. We push down, we break, we're continuing that bearish momentum. We pull back up. Obviously we broke from this low, from this high to this low, we pull back up, we push down, we break this low again. We pull up, we break down, we break this low. So we were following that momentum. And what happens? We push up, we don't stop and then react and push down. What happens is we push up, we push through this high, this peak. This is our key peak now. We don't care about this one, we don't care about this one, we don't care about this one. We care about our most recent peak. What was the peak that created that low and broke that structure? The peak was this one. This was the high that we need to break to confirm that we are moving to the upside. So what happens? Price pushes up, we break above that high, we pull down, we respect this level, and then we continue to the upside. That is where our market structure shift area would be. So I can quickly draw some of this actually. So we've got our breaker structure here, breaks the structure, break a structure, and then what happens is we get the market structure shift here. to confirm now that we are now in an uptrend. And what we're looking for, we are now looking for highs to be broken. So we break one here, and we don't break this one for a while. So we still can mark it out though. So we mark it out and then we break over here. And then what was the most recent low that broke this high? It was here. So this was our high. This is our low here that we need to keep an eye out of. We pull down, we push up. We don't break above this high. See, we need candle closure above this high to confirm that this is the strong area, that this has been the broken. And now this candle here breaks. So what was the low? So what was the low that broke this high? It was this low here. So we can move this to there. And then finally, we push down and we break. And then we dump off. That's it. It's as simple as that. Very clean, very simple. We just follow the market. So when we're in a downtrend, we are marking out our lows because that's what we need to see broken to continue our downside moves. And as soon as the recent high gets broken, that's when we know our market has been shifted to the upside, to now from a bearish structure to a bullish structure. And then if we go here, this is the ranging market I was telling you about. So our high is actually here. So this is our high. So we can pull that all the way across. So that's our high and this is our low. Then we pull up and we impulse to the upside and we actually finally break out of the range. So we break out of the range to the upside and then we continue to the upside. And then we break down from this low here because this low here created this high. We break past that and then we pull back in, respects that level. And then we continue our downside, which gets very messy there. So this is when you would have to drop to the lower time frames and mark out your structure points again. Very simple. Consolidated area again. There is a bit of minor structure involved here, but it's still very overall a ranging market. A ranging market there. So yeah, guys, very simple market structure. I've just come back to this drawing here. We're looking for, in an uptrend, we're looking for breaks to the highs. And as soon as we shift, we break the most recent low, that is confirmed to us that we are in a downtrend, and then vice versa to the upside, it confirms that we are moving back to the upside. That being said, this is when ranges come into play. We always want to see a premium and discount. I just use ranges. Some people talk about premium discounts, but most of the time, price, we want to see price come to 50% or below before we look for the buyer position to continue our trending market to the upside. Once again, we draw from the low to the high. We want to see price come below the 50%, which it does. We continue to the upside. Price comes down. We've come below the 50%. We are now looking for long position trades, but price pushes down and breaks below. So now all we've got to do is move our Fibonacci from here to here. So this is our new range, this high to this low. Yeah, we come above the 50%, we push down, we break that low. Once again, we just got to keep moving with the market. It comes just above the 50%, we push down, we keep on going. Once again, we push up above the 50%, we push down, we keep on going. And then what does price do? Pushes down, comes back up above the 50%, but continues and does end up breaking the range to the upside to confirm our flip in the market. So that is it. There's not really much else to go on breaks and structures. It's literally that simple, like I keep saying. So yeah, we're looking for just the shifts in market. Obviously on the charts it can look a lot more messier compared to the drawings, but that is what it is. You can go to different charts and look at different structures. Let's have a look. I'm just going to see if I can see anything off the top of my head. No, there's nothing clean typically. 5 minute wise, let's have a look. Sometimes you see things cleaner, but the market has been here, for example, we've been in a consistent downtrend, so you're just looking. Let me turn off the indicator. So we're breaking structures to the downside, breaking structure to the downside, and you can see that the market is just following that momentum push down, we break, structure to the downside. There's not much clear market structure, but this is our low here. We break, we push up, we push down, we break. This one doesn't break there, so we're still in this low. So this is our low. We push up, we don't break this high, we push down, we break. Then we do actually break this high, but then we flip and then we continue back to the downside, which can happen. But you can see how well the market just continues and respects the trend. And then if we're using our Gann box, here's our high, we come above the 50%. And then again here, we don't come, well, we just actually popped above that 50% there. And then this is our high to this low. We come above the 50% again. There's our high to this low. Then obviously we come above that 50% again. Then we break that high, but quickly pull back downside. So there's obviously some sort of liquidation happening there on this high here. And then we have impulsed, moved to the downside, and now we are going to be looking for something like this, a much bigger range now. Price to pull up here to continue to the downside, unless price wants to push up. And that's it, guys. Very simple, very clean. And I've said that so many times today, so good luck. And that's it. Market structure lesson 3 is done, and I will see you guys in the next one.